give us an indication of how we end off the week of trade over in Kenya. We see that the market fell slightly yesterday, weighed down by banks, weighed down by the Counter Scan Group and Safaricom.
Well, basically looking at the market, especially just as you noted there, we are seeing a bit of subdued trading in our market as of now. One of the key things that we would like to our investors to be very cautionary about is the books closure dates of most of the companies right now, especially as we are nearing payment dates of the dividends. Just like you mentioned earlier, we are seeing Barclays, a lot of rallying there, but come next week, should expect the price to start discovering itself post-split. And just like you also mentioned, we are seeing a lot of books closures and also corporate actions coming through CMC and others, which are also creating a bit of activity on the market. But largely, as of now, I guess the market is positioning itself for the second quarter performance.
Let's take a look at Barclays stock. Now it's shot up all the way to 69.50 ahead of its book closing. What type of price do you see it consolidate back down to once we have that book closure next week?
Well, Barclays as a blue chip company, there's a lot of investors, just like you mentioned there. You've been seeing the price rally most of the week as investors try to make sure they are within the register as they close their books because of the share split. And looking at the share split of 1 to 4, you should see the price trade, the share trading within the range of 16 to 20, which will be very, very promising for that stock. And I'm sure once it goes X split and the new shares are credited into their account, there'll be a lot of demand which might still push it up because it will be ranging within among the cheapest financial stocks.
Now, it looks like KCB is planning to enter the Ugandan mortgage market to take advantage of the opportunities there in the real estate sector, given the fact that Kenya's market is highly competitive when it comes to the property sector. What do you take out of this news?
That would be a very, very good move. Right now, you're hearing that Uganda is doing almost 6 to 7% GDP growth. They are just getting into another political dispensation following the election. So the economy looks fairly vibrant and also very positive. And also looking at it in terms of the competition, the Ugandan market does not seem to have as many banks as Kenya. I guess they're not even maybe the range of between 15 and 20. And because of that, KCB is well positioned to be able to take advantage, especially because of its strong balance sheet. And because of that, you would expect them to position themselves very well to take advantage of the Ugandan economy and also to be able to still boost their revenues, especially noting the fact that they recently went into some of these other regional markets.
Stanbic, CFC Stanbic released its results this week and hit by the decreasing value in treasuries given the interest rate environment we see at the moment. Earnings per share falling by almost 40% year on year. Were there any other red flags that you saw in those results that came out a few days ago?
Well, CFC Stanbic basically has been enjoying a lot, especially just like you mentioned there in terms of their treasury bill, the treasury bond trades, and because of that, there's a bit of a concern, especially because we've been seeing a declining interest rate regime. But just like you mentioned earlier, we are seeing maybe the central bank coming in strongly, and that might favor them in some way. The other concern, I guess, as of now would be the foreign exchange risk. We've been seeing the shilling and the dollar, as well as the other foreign markets behaving a bit volatile as of now, and also that positions them at a level of risk in terms of whether they can be able to still mark some gains because of the performance of the shilling. But looking at it going forward, I think CFC Stanbic has just finished the demerger with the separation with the insurance side, and that positions them very well to be able to concentrate on their core business, and hopefully we should be able to see some returns come the second quarter.
And management also indicating that the highly competitive environment in the consumer banking space doesn't warrant it moving aggressively into that space, and it remains focused on being a niche player. Do you think this is the correct strategy for the bank at this stage of the game?
Well, looking at it, especially in terms of some of the key players in the market, when you look at Equity Bank, you look at KCB, even Barclays of late, you've been seeing them trying to see whether they can be able to spread themselves, especially in terms of taking advantage of the unbanked population. And CFC Stanbic last year, we saw it taking advantage of that strategy. And one of the things that CFC Stanbic did was to open several branches. And so that branch network basically, I guess, is yet to start bringing returns. And so because of that, I guess they're trying to be a bit cautious, especially in terms of the cost aspect of it, so that they still sustain their profit momentum. But looking at it, especially in terms of the need for them to be able to try see whether they can take advantage of retail banking, the other banks that have been able to take advantage of that and still perform well, it's also one of the models that I guess they're trying to be able to take advantage of. Though right now, another bank which is fairly conservative like Standard Chartered has still sustained its strategy, and so I guess CFC Stanbic is trying a hybrid which would still be able to bring it some bit of return, only that I guess expansion will be something that they will be very cautionary about, especially now that the GDP growth in Kenya prospects markets are not as good, especially this year and even as we near elections next year.
Yeah, of course, the governor coming out and decreasing its outlook for growth in 2011 recently. Just moving on now, Kenya Airways indicating that it's growing capacity. It intends to add a new carrier. How would you position yourself with the stock? It's currently trading at 1,020 shillings. We do expect results out of it at the beginning of June, and judging by passenger numbers we saw recently, there are some positive results that the market is anticipating on that front.
And looking at it, especially in terms of how it is trading now, there is a lot of demand on it because investors are very positive about the performance of Kenya Airways. I guess one of the major risk factors that have been a concern for Kenya Airways has been their hedging policy, especially because of fuel prices. And right now, the strategy that they have been able to take advantage of has in some way cushioned them. In terms of their expansion, basically, I guess the challenge right now is to be able to still take advantage of the region because there is still a lot of opportunity, but we are seeing a lot of foreign other airlines coming also into the market and creating a lot of competition, which calls for them to be able to increase their efficiency, also to be able to try and make sure they diversify their product line so that they can be able to still enjoy some of the stable revenues that they do get. Looking at it in terms of going forward, well, tourism numbers have been going up, so it's still a plus for them and very good. Also, they're trying to also take advantage of the cargo business, which would also be able to boost their performance significantly. Well, looking at it in terms of their performance, I guess right now there's a lot of anticipation, which is fairly positive, and hopefully they'll sustain their dividend policy and keep their shareholders happy, and we'll see the share price being able to rise significantly.
At 1,020 shillings, though, that it trades at today, would you be buying it, or would you wait for a slight downside before you get into the stock again?
Well, looking at it, especially in terms of technical analysis, well, right now it tends to be on the higher end because it has been trading between 35 and 40, but it will still be a relatively good buy, and especially as we are hoping that the end of year results will be positive because it's expected that they might perform well. The only concern right now is that they are planning to do a rights issue, which might also affect the share price a bit, but right now I would definitely be a buyer because even though they were to do a rights issue, most likely it will benefit most of the people who are already shareholders, and they'll be able to take advantage of it in terms of being able to get more of the share at a cheaper price.
Samuel, how would you advise investors to position themselves ahead of the monetary policy meeting on Tuesday, given the fact that most analysts are expecting the central bank to raise its key lending rate from 6%?
Looking at it, especially in terms of that, we might see a bit of capital flight, especially in terms of the bond market. If at all, it will become a bit more competitive. Right now, we've been seeing a lot of people shifting into equities, mostly because the bond market has not been as competitive. Well, if that happens, especially in terms of increasing the interest rate and forcing people to start thinking about venturing into the bond market, it might create a bit of a capital flight, especially in terms of our market and especially in terms of the returns on investment that we've been seeing equities being able to provide. And because of that, I guess right now we'll be able to just tell most people to be a bit more cautious, especially in terms of some of the counters they go into. And even now, as we are nearing the budget announcement, some of the companies that might be affected are maybe East African Breweries, BAT, which most people should be a bit cautionary about, especially as at now.